Interest rates are going crazy. Everyone is saying home prices are falling, and the Federal Reserve just raised interest rates on a national level to the highest level that they have ever been before. But what does this exactly mean for San Antonio and San Antonio's housing market, given that everybody in the national media thinks that the sky is falling and everything around the country with housing is going to crap? Well, that is exactly what we are going to talk about today. So the federal interest rate does not correlate at all with a rise or a fall in a mortgage interest rate, especially the 30-year mortgage rate on a national level. You need to look more closely at the 10-year Treasury note. When the 10-year Treasury note goes up and down, that more closely correlates to a rise and fall of the mortgage interest rate as well. It's not going to exactly match the interest rates by any means, but this is kind of looking at, okay, if the 30-year interest rate is going to go up today, look at the 10-year Treasury note. If the 10-year Treasury went up, 30 years probably going to go up a little bit. And this also goes into the fact that the federal interest rate was expected to go up for the entire month of April, basically, since the last meeting. There was a 90% chance that they were going to raise the interest rate. So all the markets, stock market, the 10-year Treasury note, the 30-year mortgage, they all priced in that increase already. So whenever that interest rate went up, that stuff was already priced into effect, and so nothing really happened. In fact, towards the end of last week, after the Fed actually raised their rate, the mortgage rate actually fell a little bit. And what does that mean for the rest of the year? Most articles that I'm looking at are predicting that rates are going to plateau or possibly fall a little bit over the rest of the year, and especially for the rest of May. You know, we're looking at rest of May. A lot of people are thinking that we may stay in that mid-6s or may even get closer to that 6% range, but they're not expecting things to go up to where they were before. Everybody that I'm looking at is expecting interest rates to have peaked already, and so now we're just kind of doing a little fluctuation going up and down. And then towards the end of the year, a lot of people are expecting things to kind of go down in that low 5s all the way up to like 6%. That's kind of the range that people are looking at, like 5.2% all the way up to 6% is where they think that it's going to end the year at. Nationally, with the housing market, the interest rates is not the only thing affecting the prices and the activity going on with real estate right now. Nationally, we are in an extreme shortage of inventory, just like we have been for the last several years. This doesn't really help anything with COVID being the way that it did, especially going down into like the 2 to 3% interest rates that everybody got whenever everybody was buying back the last couple of years. A lot of people during COVID, you know, they made those moves across the country. They did things that they've been wanting to do for years, right? They've always wanted to live in a different state. They've always wanted to go live out on land. They've moved, you know, a ton of people moved to Montana, a ton of people moved to Florida, live on the beach, a ton of people moved to Texas. You know, a lot of people were leaving the high cost states to go to these lower cost states. Well, right now with the inventory being so low, that has really kept prices from going down. Whenever you have you know, a supply and demand issue like this, you know, whenever the demand is still relatively high given the fact that interest rates are where they're at and that people always have to have a home and always have to move in certain situations, that has really changed how the market has reacted. You know, we've had a lot less home sales nationally and in San Antonio especially, but looking at the overall picture of everything, because we are not having more people go and sell their homes, the prices are pretty much staying the same, and actually, well, as we'll talk about here in just a little bit, they're actually starting to go back up again. That has really kind of dampened the negative, you know, housing crash that everybody thought was going to happen. A big reason for this is, like I said, everybody moved to where they wanted to move, where they've been thinking about moving for years over COVID, whenever they could get those 2% interest rates, and there was all this cash in the market, right? Well, looking at it from a different angle with those interest rates, 99% of people currently have a mortgage with a lower interest rate than what they could get right now if they were going to buy a home. So if you had a 2.75% interest rate, if you had a 3% interest rate, would you go out and buy a home that was the same price as what you bought your house for 3 years ago, or refinance for 3 years ago, and then, you know, get a 6.5% interest rate? You probably wouldn't if you didn't have to. And that's what's causing people to not want to sell their homes unless they absolutely have to. If they're moving for work, if it's a lifestyle change, if they, you know, if it's a family issue, you know, if their kids are growing up and they want to follow their kids, you know, all those types of things that really cause people to move whenever they need to, not because they want to. That's what people are moving right now. The people that just want to move just because they want a better house are really kind of sticking put right now, and they're the ones doing some of the remodelings on some of these old homes. They're adding pools, they're doing all those different types of things to put money into the house that they're currently in instead of selling it and getting a new house, because it's a lot cheaper to do it that way versus, you know, going out and trying to, you know, get a home at a 6.5% interest rate. So looking at the national cycle of things, typically right around this time in April and May is when we see inventory start to go up for those summer months. Everybody typically moves in the summer, there's no question about that. School's over, it's just easier to move. You're not moving in the winter months and whenever it's snowing like crazy in some of those northern states. But that has not been quite the case this year. 2 weeks prior to recording this in the middle of May, the inventory has gone up nationally, which has been a good sign, and it was a lot later than what a lot of people expected. I think last year in 2022, that inventory bottom hit in the middle of April, and we still hadn't hit the bottom of it at the end of April. So now, over the last couple of weeks, we had seen increases, but then this week, second week of May, that number went back down again. We did not see an increase in inventory. So this is really prolonging quite a bit, and this is going to make for one of the worst inventory situations that we've had in multiple years. There's going to be fewer homes listed this year than there may have been ever historically in a calendar year. So that is going to change a lot of the factors that go into this real estate market. That's going to keep prices relatively consistent and increasing even with these high interest rates, because people that have to move, and they're going to still go out and spend the money that these homes are listed for, and they're still being listed for pretty high rates just because appraisals on these loans look at 6 to 12 months prior. So 6 to 12 months ago we were still kind of in the peak of everything. We're starting to get into that range where 12 months ago was really the peak in May, but even 6 months ago the prices were a little bit higher still, so they just kind of started to go down. So they're used to be able to use those appraisal values to kind of get it into the loan that we got right now. Basically everybody is still kind of holding their collective breath, trying to wait and see what's happening. A lot of people are calling this the great housing stalemate between interest rates, people having 3% interest rates versus the 6% interest rates that we're at. So now, where does this put San Antonio specifically? As everyone knows, national media is completely full of ridiculous headlines that are just meant to get you to click on their article. They don't necessarily tell the whole story of what's actually happening, and this is especially true when you're looking at just national numbers. I've already talked about some of these national numbers, but none of these really completely affect San Antonio in the exact way that they're affecting the entire country. Each local market is very, very different whenever it comes to this stuff. And let's look at it from this way. Just up the road, 30, 45 minutes up the road from us in Austin, they're having price decreases of around 20%. They're one of the worst hit markets whenever it comes to price drops that are actually going on, because there are price drops going on. It's just not quite what everybody thought. It's more of the correction instead of a crash. Austin's losing about 20% in value so far. I think they're kind of starting to slow down a little bit. They may have hit the bottom. San Antonio really only decreased about 8% total, and that's not even accounting for like the seasonal adjustments that you typically have to make, because in the winter months everything always goes down a little bit. That happens every single year. So you're looking at 8% total overall from the summer, when everything was peaked last year, to where we were at the bottom in January of this year. Things have already started to come back up. I mean, we're looking at an increase every month from February to March to April to now we're at early May. It's been really consistent for the last few months for us as far as the increases go. And now, just to give you a little bit more insight too on the local San Antonio markets, what I'm going to start doing on this channel is to go live every single week, talking about the updates that we could talk about from the previous week of what happened in San Antonio with the market here, with local stuff that's going on, all that kind of stuff. So it'll be on this channel. So if you're interested in that, let me know. Comment below. Let me know what you want to talk about, what you want to hear about. Also, let me know if you'll be interested in that at all. And then make sure you subscribe and hit that bell so that you are notified whenever I do this. We're going to try to do the first one next week, if not the week after. So make sure you're subscribed so that you can see all that stuff. Now, last year I posted a video talking about the shift in the real estate market in San Antonio. It was around August, mid-August timeframe whenever I posted that. We were talking about all the differences between the COVID years and where things were going right then at that point in time when this, this market correction was just starting to happen. At that time in mid-August of 2022, the interest rates had peaked to about 5.8%. A couple months before that, actually the month before that, and they had started to go down already. So at that point in that video, we were kind of right around that 5% range. So we were thinking that prices, or not prices, but the interest rates were starting to go down already, and that we were already hit the peak. Obviously, that's not the case, because we're sitting at around 6.5%, a little over 6.5% as of right now in this second week of May. So what has that done to prices in San Antonio since that video in August, and where do we think they're going to go from here? So looking at housing prices, we consistently decreased from the peak in May of 2022 all the way up to January of this year in 2023, except for a random increase in December that was completely unexpected and kind of weird. But looking at the median price point, in January of this year, we were at 308. From then, we've gone up to 310 in February, 315 in March, and then now as we just got through April, it was 320 in the month of April. So we've hit that bottom. We're starting to go back up again on the median price point, and that is the most consistent price point to look at whenever you're looking at overall growth in the market. Now this is again for the median price point. Looking at the higher price points, we've seen some decreases, and that shows in the average price for the area decreasing from that, that midsummer, May, June, I think is whenever the average actually peaked, and it's been decreasing consistently ever since, all the way up until March. In January, I think we were around 370. In March, we were down to 366 on the average price point, but then we peaked back up in April to 372. So what that shows me is that the higher price points were actually starting to fall a little bit more because there wasn't as many of those homes being sold. And again, it comes from a variety of factors, but seeing that average price point is starting to increase again, if it does that for another couple months, then we're for sure out of it, even for those higher price point markets. One thing that's going to be super important that you're going to see a lot, I guarantee you, on the national media over the next few months, is that the year-over-year increases, or price changes I should say, are going to be decreases, not increases, because last summer, in May, June was whenever everything kind of peaked across the country. So we've had some decreases over the last few months. So those numbers, the year-over-year numbers, are going to show as a decrease. So now is when everybody's going to say, oh, prices are crashing, housing market is crashing, everything's decreasing. Well, you need to look at it on a day-by-day basis. Everything is literally changing by the day, by the week here in this housing market. And this is not just for San Antonio, this is nationally too. So looking at San Antonio, if you were to look at the year-over-year increases for April and March, you're looking at year-over-year of basically stagnant. Nothing happened basically. So that is going to consistently, I'm sure that it's going to show a decrease as we get into the May numbers, June numbers, and all that, because the numbers last year were increased so much in a short period of time from March to May and even June. So looking at the year-over-year numbers, it's going to show a decrease, but the real trigger is looking at the month-over-month increases, because we've been decreasing since May, June of last year. No question about that. And so we've already hit that bottom. We've started to increase again. So our market has already bottomed out from the little bit of a correction that we had, and it's starting to go back up. This is going to be the same across the board. You're going to have to look at month-over-month increases versus decreases to really understand the true health of your real estate market in your local areas. San Antonio specifically, I do not expect anything else except for increases from here on through the rest of the summer, and then we'll probably see another seasonal correction at the end of this year, just because that's the nature of everything. Whenever it comes into the housing market, in the winter in Texas, we have the cycles. Summer is really hot. You typically have a lull in that August, September time frame. Then you have October, November that are usually pretty good, and then December, January, and February are usually a little bit slower before it starts picking back up again. That's kind of the cycle that we see here. Another reason I say that is looking at San Antonio as a whole, our job market and our industry as a whole is just very, very consistent. I mean, you look at the military city USA, healthcare, education, and even, like the logistics, supply chain side of things. Those are kind of our big major markets. And then we have a tech industry that is really on the rise. I mean, our cybersecurity is on the, is one of the rising industries here in San Antonio as well. So we have a lot of very stable industries. We're not super volatile like the tech hubs of California, San Francisco, and now Austin, which is kind of one of the reasons I think that they have seen such a drastic swing in things. But looking at San Antonio as a whole, we've always been super consistent and steady. Even looking at like the housing crash back between 2007 to 2009, you can look at this graph right here. It's one I've shown before on this channel, and it is very, very cognizant of why San Antonio is so stable. Even when housing crash happened, like this was strictly housing back in 2008. The market here plateaued. The prices didn't go up or go down. Our sales decreased like everywhere else, but the prices never really decreased, and then they immediately started going back up a couple years later. Very, very consistent here. I'm expecting the same thing in this market that we're at right now. Looking at the rest of the year, because I kind of already mentioned before that the interest rates are kind of fluctuating on the predictions. I mean, some people are saying low 5s, some people saying right around 6%, maybe right below 6%. I think if we hit that 6% number, there's going to be a lot more buyers come into the market, and so we're going to have a little bit more price increases at that point in time. But it's completely speculation. It's hard to say. I think San Antonio as a whole is going to be stable regardless, just because of all the different things I've already talked about. But looking at my recommendation to my clients, anyways, looking at whether or not you should buy a house right now. if you're going to stay in a house for 3 to 5 years, if you're thinking this is a house that you're going to, start a family in, that you want to, get to know San Antonio in, and you're going to live here for 3 to 5 years before you try to upgrade, then I think you're always safe to buy at that point, just because you're going to be paying down your equity, so you're going to be good at that. Now, if you're only looking to stay here for 1 or 2 years, if maybe you're thinking of buying for a year and then moving again, then you may want to kind of reconsider, unless you have just a lot of extra cash, or unless you plan on buying it and then renting it out and then moving out after that. I mean, those types of things, if you're trying to buy and make a profit on it after a year, I don't think we're going to have near the appreciation that you would need to make that happen. Another good option would be if you can go to one of these builders and we can get a good deal on a house. New builds are always a premium, so you got to consider looking at the prices of the new build versus a 1 or 2 year old house that you could buy from somebody else's reselling. And then you also got to look at the builders. I mean, the builders themselves are going to be giving some really good incentives as far as closing costs, rate buy downs. They may be offering really low interest rates. I know of builders right now, they're offering like 4.5% to 5% interest rates whenever we're at a 6.5% on a national level. So I can kind of help you guys guide that route of looking at these different builders. It's what I do every day, so be sure to reach out if you have any questions on any of that stuff in San Antonio. And then if you're selling, I've kind of mentioned this in a couple of videos before too, because of the inventory being so low, this is really a good time to sell for just a simple fact, there's not a whole lot of competition out there. So if you have to sell and you're waiting to do it, whether you're wanting to do it now or you're thinking maybe do it in a couple months, now might be as good a time as any in San Antonio to really put your house on the market and get the most bang for your buck, because you got more people that are coming into the market, being that it's beginning of summer. If you can afford to move and maybe even get a lease back after the fact, or move in with some relatives or an Airbnb for a short term before you move into your next place, if you've already got that lined up, that might be a really good option for you. So like I said, y'all, be sure to subscribe and hit that bell if you are excited for these new San Antonio local updates that are going to be coming as a live video on this channel here very, very shortly. And also, if you have any questions whatsoever about moving to San Antonio, you know that I'm your guy here. I've lived here my entire life. I absolutely love helping people just like you move to this area. I've done it numerous times in the last years that I've been a real estate agent. So reach out. My information is always below this video. Also, if you're looking to move to San Antonio, make sure that you check out this video on the ultimate guide to moving to San Antonio. And until next time, see you there.